Griffin Citadel is prepping a program that would pay other hedge funds for their best ideas. Joining us now is Bloomberg's chief hedge fund correspondent, Nishant Kumar. Nishant, I think about strategies like this often on the sell side. You pull a bunch of sell side analysts, get their best ideas, maybe trade on it. What does it look like to do the same thing on the buy side?
Well, it's the same thing. Actually, sell side is the origin. 2.5 decades ago, Marshall Wace pioneered that process. It collected information from sell side analysts and sliced and diced and removed all the noises and biases and tried to get signal out of it and then potentially trade on those ideas, or at least some of those ideas. It's no different than someone sitting at another hedge fund or asset manager or an analyst on those desks providing you with the same idea. So it's the same process, actually. So just the sell side is extending into the buy side for this process.
I love the last graph in your story where you point out, Nishant, that the hedge fund industry's big multi-strat firms like Millennium, Citadel, Point72, they have more capital than they have the capacity to deploy. Where is all this money coming from?
Well, all these multi-strats have record of producing steady returns for, a long period of time. And that's why investors are getting to them and investing more and more to them. So much that most of these large hedge funds have stopped actively raising money, and some, including Citadel, have even returned like billions of dollars in the recent year. And that's why this alpha capture makes sense, because they have so much money. If they want to manage more money, they want to look for newer ways to deploy that capital. Some hedge funds are doing it by allocating a part of money to external traders. Some are using alpha capture model so that they get more data, more intelligence, and potentially they can turn some of those signals and intelligence into trading signals and ideas that they can trade on.